Welcome to the Deep Dive. We take that huge stack of sources, all the research, and boil it down to what you really need to know. It's your shortcut to getting informed fast. Today, we are tackling probably one of the most argued about stocks out there right now, Bitmine Immersion Technologies, Inc. That's ticker BMNR. The market's totally split. Is this company perfectly set up to ride the Ethereum supercycle? Or is it, like the shorts say, just a monument to market excess, basically built on diluting shareholders?
And that split is real. As of October 29th, 2025, BMNR is trading at $56.50. Now, that price is key because this whole deep dive, it's about showing you why that number is so fascinating. We're going to show you that the actual assets behind each share, they're worth quite a bit less.
You're essentially buying into a belief, not assets on sale.
Right, that's the mission. We're going to figure out exactly what you're paying for with this stock. And just before we jump in, remember, this analysis comes from the team behind Stock Analytics AI. Let's get straight into it. This company's story is, well, it's quite something. A total reinvention.
Let's start with Chapter 1, Business Analysis. You really have to think of BMNR as two different companies. Before the middle of 2025, it was called Sandy Springs Holdings, Inc., tiny company, needed lots of capital, historically didn't perform well at all.
What did they even do back then?
Pretty straightforward stuff, actually. Hosting and their own kind of immersion cooling tech, but just for Bitcoin mining. Small scale, not very profitable.
Okay, but then mid-2025 happens, and this is where it gets really interesting, right? The big pivot.
Exactly. That's the core of the story. They did a reverse stock split, got uplisted to the NYSE American, and this is crucial. They brought in Tom Lee, the well-known Wall Street strategist, as chairman.
And that changed everything. It wasn't just a mining company anymore.
Not at all. They announced this new strategic mandate, the Digital Asset Treasury model, the D8 model. Think of it like MicroStrategy, but for Ethereum. Their main business now is just aggressively buying and holding ETH.
And they have that ambitious goal. What was it?
Lee calls it the Alchemy of 5%. The stated aim is to acquire 5% of all the Ethereum out there, all of it.
Wow. So how does the business model actually work day to day? Is it just buying ETH?
Pretty much, but it's how they buy it. It's financial engineering. They use their stock price, which, crucially, often trades higher than the value of the ETH they actually hold per share, the net asset value, or NAV.
Okay.
So they issue new shares at that higher market price, raise a ton of cash, and immediately use that cash to buy more ETH.
So if they sell stock for $56 when the underlying assets are only worth, say, $50.
Exactly. They raise more cash per share than the value they dilute. In theory, this increases the amount of ETH attributable to each existing share. It makes the NAV per share go up. That's the flywheel they talk about. It's accretion by selling stock above book.
And the scale we're talking about here is massive.
Oh, absolutely enormous. BMNR is the world's biggest corporate holder of Ethereum. They've got over 3.31 million ETH. That's like 2.8% of the total supply. Their main income now isn't mining, it's the yield they get from staking all that ETH.
And the stock itself trades a lot.
Hugely liquid. We're talking an average of $1.5 billion changing hands every single day.
But there's a catch, isn't there? A big threat looming.
There is, and it's a fundamental challenge. The rise of spot Ethereum ETFs? Exchange-traded funds?
Right, because those offer direct exposure.
Precisely. They give investors a way to own ETH directly, cheaply, and simply. So the question becomes, why pay BMNRs, say, 13% premium when you can just buy an ETF for basically zero premium? That's the big competitive threat.
That really leads perfectly into the next part. Strategy needs strategists.
Let's look at who's behind this in Chapter 2, Management Evaluation.
And the name that comes up constantly is Tom Lee. He's the co-founder of Fundstrat Global Advisors. He's the chief strategist. He's the public face. He's the storyteller.
And his reputation counts for a lot here.
Immensely. His credibility, his very bullish outlook on Ethereum, that gives BMNR what you might call a narrative moat. It opens doors to institutions, gives them legitimacy they just wouldn't have otherwise. He sells the vision, Okay, so you have to give the team credit. They took this struggling old company and did something radical. That takes guts. But what about the criticisms, particularly around transparency?
Yeah, this is a big one. Management puts out press releases all the time, highlighting how much ETH they hold, how much cash they have. Basically, the asset side of the NAV calculation, the numerator.
Sounds good so far.
But critics, especially the short seller Carisdale Capital, they allege that management quietly stopped providing regular, up-to-date share counts. That's the denominator in the NAV per share calculation.
Wait, hang on. Why is hiding the share count such a big deal? If they're buying more ETH, isn't the total value going up anyway?
The total value, yes. But what matters to you as a shareholder is the value per share. If they're issuing shares like crazy, even if they're buying assets, the value attributable to each individual share might actually be going down, or at least not growing as fast as you think.
Ah, information asymmetry.
Exactly. Without knowing the precise share count, you can't accurately track NAV per share accretion. That's the single most important metric for this whole DAT model. If they're diluting too much or paying too high a cost for that dilution, like if the premium shrinks, the flywheel breaks. Dilution becomes destructive. It's a serious governance concern.
Okay, let's briefly touch on operations. Capital allocation seems simple by ETH. But what about things like return on invested capital? It's terrible, right? Negative 25%.
Yeah, ROIC is abysmal, minus 25.16%. Operating margins are deep in the red too, minus 51%.
So if the crypto market crashed, wouldn't those terrible operating numbers suddenly matter a lot? Couldn't that sink them?
That's a really sharp point. And yes, if their access to capital markets dried up, those legacy operational losses would become a huge problem and anchor. But as long as the market believes the story and lets them raise capital by selling stock at a premium, those traditional metrics are frankly distractions. The company isn't really an operating business anymore. It's a financial vehicle betting on ETH and its own stock price.
Which brings us neatly to valuing this thing. Chapter 3, Financial Analysis. How do we even put a number on this?
Well, as we just touched on, the historical financials, the operating ones, they're awful. Years of net losses, negative margins, even solvency looks bad on paper. That current ratio of 0.41 for a normal company, that signals imminent bankruptcy. Less than half the current assets needed to cover current debts.
But you're saying that doesn't really matter here?
For now, it doesn't. Their real liquidity isn't inventory or receivables. It's that massive pile of ETH and, crucially, their continued ability to sell stock. That's their lifeline, not the old mining gear.
Okay, so standard valuation methods are out. PE ratio is meaningless with no earnings. Price to book is astronomical, like 38. That seems crazy high.
It does, if you think of it traditionally. And a discounted cash flow, a DCF model, totally inappropriate. If you valued only the legacy mining operations, you'd probably get a share price under $1. It just doesn't capture what the company is now.
So what's the right way?
The only method that really makes sense is net asset value, the NAV calculation. You treat BMNR like a closed-end fund or an asset manager. What are the assets worth? Divided by the number of shares.
Right. This is the number everyone needs to understand. Let's walk through the calculation as of October 29, 2025.
Okay, first, you figure out the total asset value. You take their 3.31 million ETH, value it at the current market price, add about $305 million in cash they hold, then add another $88 million for what they call moonshots, basically some other smaller speculative crypto assets.
That's got to add all that up.
And you get a total asset value of roughly $14.18 billion.
$14.18 billion. Now divide that by the shares.
And the estimated share count is around 284.74 million shares outstanding. So you do the math. $14.18 billion divided by 284.74 million shares.
Gives you the NAV per share.
Exactly. The NAV per share is calculated at $49.83. That's the intrinsic liquidation value of what BMNR actually owns for each share of stock.
$49.83. But it trades at $56.50.
Yeah.
So the past financials are irrelevant. The value is all about the ETH and the market's belief in Tom Lee's future strategy. That's a very different kind of investment. Okay, let's move to part 2, the environment and synthesis, starting with chapter 4, market sentiment. Since this is so narrative-driven, what's the market actually thinking?
It's fascinating. BMNR is like the definition of a battleground stock. Sentiment is completely polarized. On one hand, you have analysts, mostly with buy ratings. Some targets go as high as $90, like from B. Riley.
What fuels that bullish view?
It's fed constantly by management's press releases. Look how much ETH we bought. Look, our assets grew again. It keeps the flywheel narrative going.
But then there's the other side, the bears.
Right, led by that Carisdale short report. They basically attack the whole model. They argue the DAT strategy just can't work long-term against cheaper ETFs, and the current valuation is just a speculative bubble waiting to pop.
You see this fight in the trading data.
Clearly. Short interest is pretty high, somewhere between 3.66% and 6.84% of the float. That's about 18.73 million shares being shorted, which, of course, brings in the risk of a short squeeze if the price jumps.
What about the technicals, the chart?
Technically, right now, it looks bullish. The stock is trading above both its 50-day moving average, which is around $51.53, and its 200-day, around $54.13. So near-term momentum is positive.
Okay, so a divided market. Let's look at Chapter 5. Ownership structure. Who's actually placing these bets? Who owns the stock?
It's really dominated by what you'd call thesis investors, people buying into the big story, the grand vision. The most prominent name, ARK Invest, Cathie Wood.
Ah, that makes sense.
Yeah, they hold over 4.5 million shares in their flagship ARKK fund. That's a huge stamp of approval from the hypergrowth disruptive tech crowd.
And any other big institutions?
Another significant endorsement came recently from Sumitomo Mitsui Trust Holdings, a major Japanese financial group. They took a large position. That signals some serious institutional belief.
What about insiders? Management themselves?
We do see some strong signs of confidence there, which is usually good. Chairman Tom Lee bought almost $2.2 million worth of stock back in July 2025. And the CEO, Jonathan Bates, bought $1.5 million worth in September 2025.
So they're putting their own money where their mouth is.
Well, yes, but it's a little mixed. While those buys are positive, it's also worth noting that CEO Bates recently filed a Form 144.
What's that mean?
It signals an intent to potentially sell shares in the future. It doesn't mean he will sell or when, but it's a planned potential sale. So you have recent buys, but also a signal of potential future selling from the CEO. It's not quite a clear picture.
Okay, good context. Let's try to pull all these threads together. Time for Chapter 6. Risk assessment using that SWOT framework. Strengths first.
The strengths seem pretty clear. You've got Tom Lee's visionary leadership and narrative power. They've proven they can access capital markets effectively, and they have that first mover scale being the biggest corporate ETH holder.
It makes sense. Now, the weaknesses?
These are pretty fundamental too. The old legacy business is structurally unprofitable. The core model relies on potentially extreme shareholder dilution, and as we discussed, there's that governance risk around share count transparency.
Right. Opportunities next.
The opportunities really depend on the macro picture for crypto. The big one is the bullish Ethereum supercycle thesis playing out. Also, if staking yields increase, that provides more stable income to the company.
And finally, the threats. These seem significant.
They are. The biggest is probably the rise of those spot ETH ETFs, which threatens to compress or even eliminate that NAV premium BMNR relies on. General crypto market volatility is always a risk. And there's huge key person risk. So much depends on Tom Lee's credibility and narrative. If something happens to him or if the market stops believing him, the model could unravel fast.
And broader economic factors play a role too, right? Like inflation.
Absolutely. High inflation, rising interest rates, that creates a risk-off environment. Investors become less willing to pay premiums for speculative assets like BMNR. It makes it much harder for them to execute their strategy of selling stock high to buy ETH.
Even things like trade tariffs can have an impact.
Indirectly, yes. The U.S. tariffs of 2025, especially on electronics, they add to global economic uncertainty, they contribute to inflation, all of which supports tighter monetary policy from central banks. And tighter money is poison for high-risk, high-premium assets like BMNR. They need easy money and risk appetite to thrive.
Okay, that paints a comprehensive risk picture. Let's bring it all home in Chapter 7. Conclusion. Synthesize this for us. Back to the core question.
Right. If you boil it all down, the investment case here is starkly binary. It's one thing or the other. The bull case. It banks entirely on that flywheel effect working, selling stock high, buying ETH, making NAV per share go up, and hoping the staking yield they earn beats just holding ETH directly. It's all riding on Tom Lee's vision and execution.
And the bear case.
The bear case sees it as a house of cards. A speculative bubble inflated by narrative, destined to collapse when those cheaper, simpler ETFs suck the premium out of the stock. They argue the constant dilution isn't accretive, it's actually destroying value over the long run.
So let's just hammer home the valuation disconnect one last time.
Okay. Forget DCF, it's irrelevant, value's at under $1. The key number is the net asset value, the NAV. As we calculated, the actual assets owned per share are worth $49.83.
But the stock price today is $56.50.
Meaning BMNR trades at a premium of about 13.4% over the actual stuff it owns.
So wrapping this up, what does this mean for you, the listener, considering this stock?
Look, an investment in BMNR today is absolutely not about buying an undervalued asset based on fundamentals. It's not a value play. It's a very explicit, very speculative bet on two key things happening simultaneously.
Okay, what are they?
First, you're betting on a very, very bullish future price for Ethereum itself. The supercycle needs to happen. Second, you're betting that Tom Lee and his team can keep executing this capital raising strategy effectively. Specifically, can they grow the NAV per share faster than the dilution they cause and faster than that 13.4% premium shrinks, which seems inevitable given the ETF competition?
Wow. So your entire return beyond just ETH's price move depends completely on that premium surviving, or at least shrinking very slowly. Can they keep pulling that financial engineering rabbit out of the hat? That's the multi-billion-dollar question. We hope this deep dive into Bitmine Immersion Technologies gave you the framework you need to think about this complex and really fascinating battleground stock. If you found this helpful, please do like this video and subscribe to Stock Analytics AI on YouTube. It really helps us out. For just €4.99 a month, members get access to our full playlist. That's 500 deep dive videos covering every single stock in the S&P 500. And we're moving on to the NASDAQ 100 next, exclusively for members. Plus, members can request specific stock tickers in the comments, and we'll prioritize analyzing them for you.
And just a quick reminder, this analysis was generated by an AI system. It's purely for educational purposes. It should absolutely not be taken as financial advice. Please always do your own thorough research or talk to a qualified financial advisor before making any investment decisions.